Hi everyone, welcome to Triumph Trust FX channel. Today we'll be looking at a particular strategy that is very profitable. If you are going to stick to the rules, you are going to make good money from this strategy. So this video is going to be split into two. I don't want to make a video that is too long. So this is a part one of the two videos. In this part, I'm going to explain the strategy, the method, and the setups. And we have two types of entry in this strategy. So the first entry will be explained in this part, and the second entry will be explained in the part two of this video. So as I said, this strategy, this method is very simple and straight to the point. It's easy to trade, even if you are a newbie. Now, if you are new to this channel, please do well to click on the subscribe button and click on the notification bell for you to be alerted or notified anytime we upload a new video. Now, I will start with the indicators we use for this strategy. So these are the list of the indicators. So the main indicators we are using is this one, the moving average, the TDR Pro. Then we have the weekly high and yesterday high and low. This weekly high or low and yesterday high or low. All the indicators you need are inside this zip file, TTFX trading indicators. So there's a link to our free Telegram channel in the description of this video. You can click on it. It will take you to the Telegram channel, Telegram group, rather. There you will see this zip folder. You can download it and install the indicators. So this is a name for the template. Still in the group, you get the template. If you go to the file section, TTFX trading method, that's the name of the template. So this is the work time. The work time gives us the session. This is the Asian session, New York session, and here is London session. So we have this is a multi-moving averages. The yellow moving average is 5 exponential moving average. We have the red as 13 exponential moving average. This is a 50 exponential moving average, the aqua color. And we have the white is the 200 exponential moving average. We also have the 800 exponential moving average, which is the blue. So let me check another pair if we can. Yeah, this is a blue 800 exponential moving average. So what is this strategy all about? It's about the move of the market makers. Before the market makers will take a trade, before they initiate a move, they will do what we call a stop hunt, something like this. Before they make a move, like they were to move to the downside, they give this move an upward thrust before they move downward. Look at here, the intention is to go up. First of all, they give a false move to the downside. This will make people to feel this is a sell and they will take the trade, and before you know it, putting their stop loss in this area, the market will move up, take their stop loss and go in this direction. And for those who have already bought with this candle already, who have put their buy orders here already, their stop loss will be taken out, then market will move in this direction. So with this understanding, this strategy will make it simple for you to identify this kind of move and be able to know the direction the trade is going, and you take your trade. So what are the criteria we'll be using to trick this setup, this method? So number one, we are going to see what we call an impulsive move. We want to see an impulsive move. That is the first thing we want to see before we consider the setup. Then number two, we are going to look at price coming to a key zone. I will explain what these key zones are. Price must be at a key zone. Then number three, we want to see liquidity grab. Liquidity grab. So we want to see market take out liquidity or um, stop hunt. Then after that, we want to see a break in market structure, which is BMS, leading to a key zone retest. We want to see the key zone rate. Sometimes the key zone retest will come before the break in market structure. Sometimes the break in market structure will occur before the key zone retest. Then we want to see a confirmation from our TDI. Then number six, we take the entry. So I told you there are two setup and two different entry type. These are what we'll be looking at. One must see this criteria met before we take any trade. Now, starting from the impulsive move, a move like this is an impulsive move. This is what we're referring to impulsive. A forceful move is a forceful move. Those are the move we refer to as impulsive move. So that must happen before we take a trade. This is an impulsive move. This is an impulsive move, impulsive move, impulsive move, impulsive move, impulsive move, and impulsive move. Then we want to see price at a key zone. Now I will give you the list of my key zones that we'll be looking at to trade. Now the first one we are looking at is we want to see price at yesterday's high or low. Yesterday's high or yesterday's low. We want to see price as at weekly high or weekly low. We also want to see price at, let me call it, yesterday's New York session high and yesterday's New York session low. Then we want to see price at the 800 exponential moving average. We also want to see price at 200 exponential moving average. So the setup must happen in these areas. Then another thing I want us to take note of is that we don't want to trade during the Asian session, and we don't also want to trade along the Asian range. So this is the Asian session. So we don't want to take trades there. So we're going to be trading once at the beginning of the London session, then we'll be ending our trade here. You may allow your trade to run overnight, but after this point, do not take trade. This is the New York session. So we don't want to, this is where we want to trade. This one we want to take our entries. Then at this range, if price is at this range, we don't want to take trade at this level. So we want to take trade above the Asian range and below the Asian range. So the key zones will be formed. So we are taking trade on a key zone that is above the Asian range and a key zone that is below the Asian range. All right, so yesterday's high, if you look at the indicator, we'll have some lines. This line, this is the daily high or low. So every day it will be marked for you. So this is yesterday's low. This was the low of yesterday. It will be marked on today for you. So if price get to this level, we'll consider a buy. Look at this red line. This is the last week high. If price get to this zone, we can think of buying at that point or selling. Then we also have, this is yesterday's high. If price is at yesterday's high, we want to consider taking a sell trade. So we have I've already shown us the 200 exponential moving average, the white, and the 800 exponential moving average is the blue. So when price is on them, we can consider taking the trade. We also have the Asian session. So sorry, the New York. So this is the New York session. This is what I'm referring to. This box. So for this day, let me see if I can have an. Okay, look at this. So this is assuming this is today. This is yesterday. This is yesterday's New York high. So if price is at this level today, if price gets to this level today, price get to this level, we can take trade from that level. And this is the low of it. So if price is at that low level today, we can take a trade. But we don't want to take it if it's on the Asian range. There are other strategy that you have that will make you to take trades anywhere, but this one we just want to stick to taking our trade outside the Asian range. So that is it. Another thing to take note of is the TDI. So if we were to take a buy from here, we want to see the RSI line, which is the green line, crossing the red line, which is the signal line. So that is the confirmation from the RSI. Or we want to see price after the RSI across the signal line, and our setup is not meant yet. We want to see price on the radius of the line. It should not break below it, but from here, price the RSI should move away, giving a shark fin or something like this. So that is what we want to see in the confirmation then before we go ahead to take our trade. All right. So I told you we have two types of entry. So I'll start with the first one. So let's go to CHF JPY and see look at the setup. So after the Asian session, at the open of the New York in London session, price dropped from this level down to this level with an impulsive move. This is a forceful move. So this is the move I'm talking about. So this is the first criteria. Price must give you an impulsive move. Then that is for this. The next thing we want to see, so that is number one. The next thing we want to see is price should be at a key zone. And I told you the list of our key zone. This is yesterday's high, yesterday's low. So since we want to buy, we'll be looking at yesterday's. There's no yesterday's high here. There is no weekly low here. There is no, but we have a New York session low. So this is New York session low. So you can see that price is at New York session low. So it's a key zone. And if you look at it, price is also at the 200 exponential moving average, a key zone. So the second criteria is met. So the next thing we want to see liquidity grab or a stop hunt. We want to see price move away from the zone, come back and grab liquidity, take out this level. And if you look at this place, on the first move, there was a liquidity grab. So if you draw from this level, you can see the price got here, but at this first move, there was no liquidity grab actually. So from here, we want to see price move away. Price came back and took out liquidity here. There's a stop hunt. So the liquidity grab, we want to see it when it happens. Price will break the level and goes back immediately. It's not going to stay. So that is the confirmation of the liquidity grab. Price just came, hit out stop losses, and turned back. So we have seen liquidity grab. The next thing we want to see is break in market structure. What happened? As price moved away after the liquidity grab, price broke market structure. This high was taken out. So we have a break in market structure. The next thing we are looking for, we want to see the key zone retested. So as price move away, you can mark up this zone, especially from the level liquidity was grabbed. You mark it out. So want to see price come back to that level, which is this. So what happened? As price traded away, price came back to that level. So we have our BMS, we have liquidity grab, then we have our BMS, and we also have the rate test now. The next thing is the TDI confirmation. So what happened? What are we waiting for? As price has come to retest this level, we are waiting for TDI, the RSI line, which is the green line, to cross above the red line, which is the signal line. As soon as that happens, that will be around this area. You take your buy. So your stop loss should be at the point, at the level where liquidity was grabbed. Then your take profit from 220 pips up, or you can use the 50 exponential moving average or another key zone above here, which is yesterday's high and weekly high that we'll have here as your take profit. So first take profit, just target 20 pips. 20 pips is okay. So that is how we take the trade for the first setup. Right? I hope it's clear. So we want to see an impulsive move and price coming to a key zone. So we have the New York, yesterday's New York low as a key zone here. We have the 200 exponential moving average. Then we want to see price grab liquidity, and this is what happened. Liquidity has been taken. After that, we are waiting for a break in market structure and a key zone retest. So this is a break in market structure. Price came back to retest the key zone, and we wait for the TDI confirmation. As soon as the RSI line crosses the signal line, we take our entry. 20 pips and above. So if your setup happened after this New York session, please do not take it, ignore it. Because most of the night, most of the Asian session, because immediately after this, we are moving into the Asian session. Most of that time, consolidation, the market will be consolidating. So let's also check NZD-JPY. This is NZD-JPY. So look at what happened here. Immediately after the Asian session, the London session began. And what do we see? We see a drop down and a positive move of price to this level. And which level do we have here? We have a key zone here. This is yesterday's high that was, weekly high, the red line. And we also have the 200 exponential moving average, a key zone. And price moved till it got to the yesterday's New York session low. And as price got to that point, what happened? Price also took out liquidity. Look at it. This is a low. Price came to this low, broke it out with two pins, went back immediately. That is a liquidity grab. So liquidity grab has taken place already. So number one is met, number two is met, number three is met. Then number four is what we are waiting for, the break in market structure. This is a high, price moved up, took out this high, and the next thing we are waiting for should be the retest, key zone retest. So price came to retest the zone, and I told you you can make your key zone retest at a point where price, you can adjust it to the point where price took out liquidity. So this is where price took out liquidity. So if you adjust it to this point, you wait for a retest. On the retest, the next thing is you want to see the RSI line, the green line, cross above the signal line, which is the red line. So this is the second part I explained on the RSI and the TDI confirmation. Price has already crossed at this point before. So during this retest, price could not break below this red, but close above it. So that is when you are taking your entry. Stop loss below the stop hunt or the liquidity graph, and take profit as from 20 pips above. So your target, 50 exponential moving average, your yesterday's high, and every other key zone you see above. So it's simple. So we also have, let's check USD CHF. All the setup happened on Friday. USD CHF. This is USD CHF. Let's see what happened here. All right. So after the Asian session, we saw price moved with an impulsive move to these zones. We have the yesterday's high here. We have the yesterday's high here, sorry, and we have the weekly high at this level. So price got to that level. Impulsive move, price at key zone. Number three, we want to see a liquidity grab. So there is no liquidity grab yet, but we see a BMS. Price dropped from this level, consolidated a loan and consolidated upward and dropped below it. So this is our break in market structure. So we have a break in market structure here. What are we waiting for? We want to see a retest of the key zone. Key zone retest. Price goes back to retest the zone, but something is missing. We have not seen a liquidity grab yet. So it's not safe for us to take the trade. We want to see the market maker take out people's stop loss before we take our own entry. So a retest has happened and we are waiting for a liquidity grab and a TDI confirmation. So price retested it, dropped down a bit and came back here, retested the second time and took out liquidity. So liquidity has been taken. Price to go move up with the first and came down from the level. So as soon as we have this, we wait for TDI confirmation. As soon as the RSI line has crossed below the red, we take our entry. Stop loss above the swing high, then take profit 50, 200, and any other key zone. All right. So let's look at Euro USD. I think there's a setup there. I saw too. Okay. Yes, there's a setup on Euro USD. So after the Asian session, we see an impulsive move to the downside. And what zone do we have here? Yesterday's low, a key zone. It broke through this 200 exponential moving average and got to this key zone. And if you watch out carefully, you will see that as soon as price got to this key zone, it took out liquidity. Liquidity was taken, price broke it and moved away from it immediately. So liquidity grab has occurred. Liquidity grab has occurred. Then we are waiting for BMS, breaking market structure. So as soon as that happened, price moved up, created a high here, and dropped that to retest the zone again and broke market structure. So we have our breaking market structure and wait for a retest of the zone after this breaking market structure. So this is where price, I told you are marking the zone on that level where price took out liquidity. So price came to retest the zone. We wait for our TDI confirmation. As soon as RSI cross the signal line, we take our entry. Stop loss below the stop hunt or the liquidity grab and take profits 250 exponential moving average 50, 20 pips from here and above. So you have to be patient. This is a 15 minutes time frame. So you are going to be patient for all these ones to take place before you take your entry so that you will not lose your money. Then we have the Euro AUD. There is a setup on the Euro AUD as well. Look at this setup. After the Asian session, price gave an impulsive move to the yesterday's low. This is key zone, and this zone is, although it's not up to the yesterday's New York high, but here, what happened? Price took out liquidity. Can you see that? There's a liquidity graph here. So impulsive move, price at key zone, liquidity graph, PMS. So price drop and broke this structure. There's a break in market structure, broke through this low. So what are we waiting for? A retest of the zone. Price retested the zone here, and we want to see TDI confirmation here. We take our entry. Stop loss above the stop hunt. Take profit 50 exponential moving average 20 pips. So I think this gave over 20 pips before moving up. So your entry will be somewhere here, and this gave 16 pips and 21 to 22 pips before going up. So the last one I will explain on this is on AUD USD. AUD USD. This is AUD USD. So look at this setup. Almost the same thing that happened in that uh, Euro AUD. So after the Asian session, we see an impulsive move to the downside. It came to 200 and 800 key zone. Price, you would have taken note of this, but price moved up, no breaking market structure before finally dropped to this level. And what happened here? So price, all the first impulsive move is made, price at key zone is made, liquidity graph is what happened here. See liquidity graph. As soon as that happened, we are waiting for BMS, break in market structure. So what happened? Price moved up and broke the structure. We are waiting for price to come back to retest our key zone. And the retest, we wait for TDI line to give us a crossover concept confirmation. We take our entry somewhere here. And price move up to the 50 and decided to drop again, taking out our stop loss. So if this is a liquidity graph, you will know this is a liquidity graph for sure. Price took out liquidity, came back immediately. So you can take another entry here. Or if you're afraid, you can leave it, wait for a good and a better setup to take another trade. So as you can see that this method is quite simple, but I will not want you to jump into it and start using it to trade immediately. I want you to take your time, 1 month or higher, to study the setup, practice it very well, and be master it before you start trading it in your real account. So take your time to study this, then you're going to make good profit from it. So this will be the end of this part one. So you can watch the second type of entry on the second video, the part two of this video. So if you have not subscribed to this channel, you are new, please click on the subscribe button, like and comment, and also share this video. Thank you very much, and God bless.